Hey everyone, Ryan Hauser. Now in this video we're just going to go over basically candlesticks and some key points on how to point them out. Now all of the trading that I do is based off the candlesticks, okay? So what you need to do is just focus here, try to figure it out, and this is going to help you read the charts. Alright, so you have line charts, you have bar charts, and candlestick charts, but candlestick charts are all I'm going to be talking about because that's basically what I do. So basically what it is, it's just a bunch of candles lined one after another, and it gives you information on, whether the prices are going up or going down. So it's actually the best way to visualize what your Bitcoin's doing, whether it's going up or down, whether you should buy or whether you should sell. So let's take a more detailed look here. Now, Japanese candlestick, basically this part here is what the body is. And these are what we call the shadows, okay? So this is your open price and your close price on a buy. And then here is a sell, a red candle, and you can see how it's reversed on that. All right, so it's pretty easy to read. Now, a red candle basically shows that the price is going down, and a green one represents that the price is going up, okay? So obviously you like green. So if we're gonna look at a 10-minute chart, each candle will represent a 10-minute time frame, okay? And so here we go. We have an open price lower. If an open price is lower than a close price, it'll be green. If it opens higher than the close price, it'll be red. All right? So the candlestick charts are excellent for spotting trends that are going to change, okay? So it helps you give signs when the market's going to basically change its direction. And these are called reversal patterns, okay? So basically it could be bearish. That means that it's going to have a downtrend following, which is a signal to sell. Or it can have a bullish trend, which is likely to start going up. And of course, then you want to buy. All right? So let's see the most popular bullish patterns to buy. So we call this one bullish engulfing. Now, this one consists of a red candle followed by a green candle, okay, which fully engulfs the red candle. And this is basically an indication that the market's going to turn around and start going up. So there's a good chance you would want to buy in a situation like this, okay? Now, the indication's a lot stronger, of course, if it is like the green candle is like twice the size of the red one, or followed by another green. All right, another bullish pattern is called the hammer. Now these are actually what I go through quite a bit. I go off of. It's when basically it looks like a hammer. As you can see here, you have a red candlestick, which basically has a long handle and then the head at the top. And this is basically an indication of a declining price starting to get momentum in the other direction, and this would be a buy in this situation. And it's a little bit stronger again if it's followed by a green candle, okay? Now another bullish pattern is the morning doji star. So this consists of 3 candles. You have the red, basically a sell one, followed by a doji, followed by a green one, which is longer than 50% of the red. If it is longer than the whole candle of the red, it is definitely a huge signal and one to buy on, okay? Now bearish patterns, which would be a bearish engulfing, is basically if you have the green one, basically it's the same thing but reverse. So if you have a red following a green and the red is fully engulfing the green, that means there's a good chance it could reverse and you would want to sell. All right, so another one is a dark cloud cover. Now, this is when a long green candle is followed by a red candle, which closes below 50% of the green one, okay? Now, it is a lot more rare than you think for a red to close higher than the green, okay? So usually they're about the same here, but it's definitely a signal that you would want to sell, okay? Now, We also have a shooting star, and that is basically your reverse handle, is how I look at it, or reverse hammer. It's when you have it's basically at the end of an uptrend, and so that's when you would want to sell. Okay, so it's where it would have started off as a green candle, and it would have went up, but then before that candle closed out, it shot back down, and that's what gives you that reverse handle, and that shows you that right now you have more of a bearish coming on, and the trend could change, and so then you would want to sell. All right, so that's about all you really need in these candles to get a really good grip on what you want to do as far as knowing when to sell and when not to sell. Just remember, a lot of these signals are going to show up a lot of times where if they're not very strong ones, you don't really want to read them, okay? And what I mean by that is, like, if the hammer is short, if it's a short handle with a short top, it's not as big as an indicator as if the candle is really long with a long handle and then that little hammer head at the top. There's a better chance. Now, if you want a little bit more insurance, more or less, you want to wait for the next candle to see if that one is supporting where you think the market's going to go, and then if it is, get ready to act. All right, so that's it on these candles. When I show you a little bit more into the strategy section, the video that'll be called, I don't know, probably Ryan's Double Down Method or something along those lines, I'll show you a little bit more on some more tactics on what I do as far as to be really quick on the draw so that you can take advantage of these candles in more of a shorter time frame. I actually do trade a lot of quick trades on the 1 minute candles. All right, so that's it for this video. You can pause the video, write these down, maybe make charts or whatever so that you just kind of have a chart that, hey, you can go look at when something's happening inside that trade. All right, guys, thanks, and we'll see you in another video.